and welcome to the Trading Bell. My name is Nokip Kimboy, and today our focus is in Safaricom. Question is, what's happening in Safaricom? What measures and moves are they making? This company that we've known for ages, what transitions are they undergoing? We understand they are in Ethiopia. That operation, how is it doing? And what they are the avenues of growth in this particular sector that they play in? Well, today my conversation is with Dilip Pal, who's the Chief Financial Officer at Safaricom. Welcome, sir, to this conversation.
Thank you, Noah. Thank you for having me here.
Beautiful. So, looking at the numbers, the focus was when the numbers came out, the drop in profit. Yeah, and when it comes to drops in profits, post-COVID, we've seen that phenomena in many companies. I mean, we are in a recovery phase. But for you, it was 22% deep to 52.5 billion shillings. Thinking about that, what is the biggest contributor to this sort of slight drop?
Excellent question. And before I come to the drop in profit and explain the numbers, let me try and explain you what have changed for Safaricom ever since we went into Ethiopia. So we are now consolidating Ethiopia financials. So we need to really understand Kenya numbers and Ethiopia numbers separately. Yeah. So if you have noticed, our Kenya numbers came out very strong despite all the macroeconomic headwinds. On top of that, everything was globally impacted. I think we were not insulated. As a telecom operator and as also a mobile financial services operator, we penetrate pretty much entire Kenya, right? So we are not insulated from the effect of that. But on top of that, we also had regulatory headwinds from reduction in mobile termination rate. That has actually knocked off close to 2 billion of top line. Yeah. So, but despite that, our top line Kenya core performance was very strong. So we reported numbers about 5% service revenue growth year over year. But within that, the first half was slightly muted, but second half came much stronger. So, and if you really adjust the mobile termination rate changes for a like-for-like comparison, our year-over-year growth in Kenya on top line came 5.7%. Yeah, yes. And second half was actually 6.5%. So you see that growth trajectory in the second half was much better, as transition, election uncertainties, before election, during election, after election. So there is a business activities actually came much below expectations. So on top line, I would say we are on course. We are growing revenue top line in Kenya. The other headwinds that came from inflationary challenges, including, if you have noticed, the increase in energy cost. So we are probably the biggest consumer of electricity and the other fuels to run our 6,000 base stations, right? That has knocked off close to $1 billion in our cost. So our cost actually gone up 7%. But I would say in an environment of inflation, which is 8 to 9%, a 7% growth in operating cost was still very good because we have really driven our productivity agenda very strongly. Okay. So with all of that, if you see the Kenya numbers, we actually grew our profit. So profit after tax grew on a reported basis by 3%. Yeah. But if you adjust the MTR impact, so it's a mid-single digit growth, which is kind of in line with the top line growth. So I think first I want to explain the Kenya first, which is core. Yes. And we are growing there. Okay. Then comes Ethiopia. And as Ethiopia, we got our license in 2021, around June, and then we started investing. So we are in that investment phase. It's a big country in terms of population coverage that we have to do, and it's a big opportunity for future. And that's where we are focusing on. So Ethiopia, we launched commercial operations in October last year, and so far it's been pretty satisfying. We have recruited 3 million customers. We have invested 1.3 billion so far in that unit, and it is expected that initial days, telecom is not developed in a year or two. It takes time to develop telecom business. Okay. So that's what we are in that startup phase and therefore startup cost in Ethiopia.
All right.
And that drives down. So we consolidate Ethiopia in group financials. That's the change I was referring to. That now, because of that, on a gross profit after tax, on a gross level, it declined at 22%. But that's not the number to look at.
Okay.
The number to look at, because we are 55.7% shareholder of Ethiopia.
Yes.
The rest is owned by minority. So the way to look at profit after tax is you remove the minority interest, because that profit is not attributable to the shareholders of Safaricom Group. So you knock that off, then comes the numbers. It's a decline of 10.6%.
Okay.
So I think headline sometimes creates a bit of confusion because at a group level consolidated. Yeah.
Exactly.
Yeah.
So the initial cost that the company has to pay in regards to breaking into a new market is what we are seeing, and it's not fully 22% as we are seeing it. But looking even as under the assets, because I'm looking at these numbers, especially non-controlling interest. I think is this from a group perspective? Because I saw that has grown from 40.2 billion to 75 billion. And I sort of juxtapose this with the share prices, because I look, if non-controlling interest is growing, there's certainly a particular element of confidence, people buying into the company in a way. Is this largely also driven by Ethiopia, or we are also seeing here in Kenya, because the shares have really been dropping?
So I'll come back to share price a little later, but let me just explain the non-controlling interest part. So I did mention to you about our investment so far, as of March end,
Yes.
last financial year, $1.3 billion US. And non-controlling interest increase is coming from, so this is a consortium level at 100% level, 1.3 billion, which means that the minority contribution of say around 44%, which is not owned by us, is contributed by them. So the increase is purely in Ethiopia, the non-controlling interest. It is the additional investment the minority shareholders are putting in to build the infrastructure there. We are contributing say about 56%, and minority holders with the other consortium partners are contributing 44%. That's how the increase that you see in the non-controlling interest is. So it's not in Kenya.
Okay.
Yeah. So now on, you did mention about share price. So I don't want to miss out that opportunity of talking about that. I don't know whether you have any questions around that, any specific questions around that, or
because I mean, I looked at the share price right now, and Safaricom has been on the tongues of many, because it's one of those companies. Especially, I listen to some of my older friends, and that's normally one of their regrets. When the Safaricom IPO came, I wish I would have bought more and hold on to it. But right now, I see now the share price actually has dropped 1.8. It's trading at 13 shillings, previously 13 shillings and 25 cents. And this drop, help us understand what exactly is happening, and is there what will turn that curve?
Yeah. This is something. It's not something which has happened just now. You see that ever since the global macroeconomic crisis started, Ukraine-Russia war, China supply chain disruption due to COVID restriction, you start seeing, and also the shift in the way the interest rate is increasing in US, in other European markets, and high inflationary and macroeconomic challenges in specific to, say, for example, in Kenya. That macroeconomic factors are main reason for share price drop. If you look at our profile of investors, there is quite a bit of investors, almost, yeah. So we are about 25% listed publicly. Out of that, almost 1/3 of that investors are foreign institutional investors. It used to be even higher. There has been a consistent pressure on selling from their side. Two things are happening. One is the interest rates are much better in US, in other markets. Mm-hmm. Second is, because of shilling depreciation, the real return is coming down. If you're investing, and then your shilling has depreciated 15% compared to last year. So if you're investing and then you're getting a return in dollar terms, so actually in dollar terms their return has gone down. So there, and also the shift in what you call that capital flight from emerging market to the developed markets is happening. So it's not necessarily, one is the global phenomena, so there is a readjustment happening, money moving out of emerging markets. They're trying to reduce their risk. And second is Kenya. Again, I think the currency concern is huge. And also the foreign investors always look for stability in the currency because they're investing in dollar and they need to get the return back in dollar. Two things they look at, saying that how fast they can get their money back, the basically liquidity, and second is the rate. I think in both accounts there has been quite a few challenges.
Okay.
Yeah.
And how does a company sort of prepare itself sort of a soft landing? Yeah, because with the Fed tightening, especially in a market where close to 50, slightly above 50% is foreign investors, then that instability immediately kicks in. Is there moves that can be taken within the market sort of to cushion it, or we just have to be open to play in this global market and also accept the global forces and consequences that come with such moves?
I will divide into two parts. So one is focusing on performance, right? Make sure that Safaricom is a purpose-led company. It truly believes in transforming lives. So make sure that you focus on that, on your strategy, long-term strategy, focusing on your strategy, so that these are ups and downs in economies. You have seen this before, right? But this company is not built in just 1 year. It has been 2 decades, right? So we need to make sure that we are focusing on our execution of strategy, which is very clear. And a part of the strategy is also Ethiopia. So making sure that Ethiopia scales up. Just to give you some numbers, we are about 1,300 base stations. Base stations, which what propels the way you can talk. You are using a mobile phone. Base stations support that, yeah? It's almost like a factory, right? Now, 1,300 base stations as of March end. By next financial year, we'll have about 3,000 base stations. Imagine that is almost half of what we have in Kenya today. We have about 6,000 base stations. So the size of Ethiopia by next financial year is going to be half of Kenya in terms of the coverage. That speaks of the opportunity and the growth side. So we need to make sure that we do. And then we are talking about 10 million customers. Yeah, we just launched October last year. There's a huge opportunity in Ethiopia. So we need to make sure that we execute on Ethiopia strategy very well.
Okay.
And that, of course, propels our top line growth. And year 4, we talked about a break even in Ethiopia. So as you see that, the confidence also comes back, because people now seeing a little bit of a drag. Kenya is strong, doing very well. We all understand that. But Ethiopia is dragging down because of the startup cost. But if they see the scale up happening on the revenue top line as well as in the bottom line, I think the confidence will come back and we stay on course on that.